This is George Bayruthi from FS Securities, a stockbroking firm on the Gold Coast in Queensland, Australia. And every Monday morning, I tell you what happened over the last few weeks and try to forecast what may happen this coming week and beyond. Also at the same time, what is hot and what is not, and what you should hold and what you should fold. And by the way, if you like the presentation, all you have to do is please give us some feedback. First of all, I want to start with what happened in America over the last 2 weeks. What you see, those two columns, that is the change over 1 week. However, we'd like to see what effect last week changes over the last 2 weeks. So in other words, the Dow, for instance, last week was up 0.1%, only 38 points. But when you put the 2 weeks together, actually the Dow was down 139 points. However, the Nasdaq and the S&P 500 were both positive last week and positive over the last 2 weeks. However, you can see that the gain last week has actually been mitigated the losses that we've had the week before, because obviously to have 2 weeks of 1% rise when we had 2% rise only 1 week, that means it was a negative 2 weeks ago. Alright, so that's very important to know that the Nasdaq and the S&P 500 hit all-time highs. The Dow was actually a lot more volatile. Remember that the Dow Jones consists of 30 multinational companies that rely very heavily on export and international trading. Now, what happened to the US dollar? It gained strength over the last 2 weeks, and of course that means the Australian dollar really went the opposite way, because the Australian dollar versus the US, of course, they are all negatively correlated. Okay, so that's the Australian dollar and the American dollar. Now let's have a look at commodities. Over the last 2 weeks, gold was only up 70 cents. It lost $8 last week, so obviously it must have been a very good week 2 weeks ago. Silver is still very positive. Over the last 2 weeks was up 7.6%, so silver did better than gold. Crude oil, West Texas crude oil, was down 7% last 2 weeks. If you're interested to trade any of those commodities like natural gas, wheat, corn, soybean, coffee, orange juice, whatever, all you have to do is call us and we'll give you some guidance. Now let's have a look at the Australian market. The S&P 200, which is of course is the gauge of our index, and by the way, it is mainly consisting of the financial and the materials. Both of those two sectors make up nearly 40% of the ASX 200. When both sectors are up or down considerably, of course the ASX 200 reflects those changes accordingly. Well, the financial was up 1.85% over the 2 weeks, and the materials was up 1.1% last 2 weeks. However, we've seen some weakness in the material last week, which of course affected the overall performance over the last 2 weeks. However, most sectors were actually positive, with the exception of metal and mining and materials, and gold went down slightly last week. Over the last 2 weeks, we can see that real estate was down, communication, Telstra was down, and the energy was down because of oil. In terms of the various stocks that we like to trade, especially those who have got options against them, we see that BHP was down over the last 2 weeks, affected mainly by what happened the very last week. CIMIC, the old Leighton Holdings, was almost unchanged at 8.5% over the last 2 weeks. Rio was negative over 2 weeks, and so is Telstra. Telstra hasn't changed last week, however, was slightly down over the last 2 weeks. I think it got to a point where it was trading around $3.89, the best performance for Telstra in many years. Again, if you want to get a copy of this chart, all you have to do is talk to us. Now, what happened overnight, well, actually on the weekend, we've seen the Dow down 0.2%, 51 points. The Nasdaq was up 0.7% and the Nasdaq was up 1.1%. BHP and Rio, BHP was unchanged, Rio was slightly up. And in Europe, the Stoxx 50 index, which comprises most major European markets, was up 0.4%, and the FTSE in London was up 0.8%. Telstra was down 4 cents last Friday, on Friday. Okay, and gold on Friday was up 0.3% at 1,431.8. Iron ore was up 1.1% overnight to $118.31. That of course will affect BHP, Rio and Fortescue. And the Australian dollar on the weekend was down 0.6% to 69.1 US cents, 62.1 euro cents and 55.8 British pence and 104 New Zealand. By the way, Bitcoin was trading at 9,368, again down below the 10,000 US mark. So there is a lot of momentum on the negative side for Bitcoin. Remember, Bitcoin only a few weeks ago was trading above 14,000 US, and the Australian dollar Bitcoin price was actually as high as $16,000. Well, now it gives you 13,552 Australian dollars. So at the moment, Bitcoin and most cryptocurrencies are actually on the downside. Okay, let's have a look at what happened in terms of volume on Friday and over the last several weeks. On Friday, we've had a reasonable volume, 2.2 billion transactions. Remember, it's been going up over the last 15 days. And 25% of all the stocks were actually advancing or have advanced, and 31.3% of all the stocks were actually declining. Now, if you look at the big picture, overall, we've seen most stocks advanced last week and the week before in relation to how many declined. Again, it gives you some feeling about what's happening in the market. Okay, we have a mechanical system, and the mechanical system allows us to actually try to forecast the coming week based on what happened the last 5 weeks. So we'll start with the American market. As I mentioned, the Dow was the only index in America that had shown a bit of weakness. The Nasdaq and the S&P 500 were both very positive. Crude oil was actually down, bearish, and so is natural gas. Gold has gone from very strongly bullish to neutral and slightly bullish. Silver, on the other hand, as I've shown before, still holding on very strongly. So if you're trading commodities, obviously you go bullish with gold, bullish with silver, and you take a neutral position on gold, and you go bearish on oil. Now we look at the chart for the Dow Jones, and we can see here that before Christmas we've had a major drop in the Dow, recovered most of it up to March, down, and then reached all-time high. However, it wasn't able to hold the all-time high on the Dow. Now looking at our market, most of our sectors last week were bullish except the energy and also telecommunication. For the very aggressive, still bullish, but for the investor and the conservative trader, we're neutral. So what do you want to trade here? I think you find that the financial is holding very strongly. So you want to trade the financial, and of course you pick the best bank amongst the 4. Gold, I think at the moment it's probably moving sideways. So if you're making some profit, maybe it's time you take some profit out of gold. We're still very positive on the overall market. The ASX 200 is very bullish from last week's performance. And industrial and consumer staples. Consumer staples make up, the Harvey Norman styles, the things that you would like to buy but you don't need. That is consumer staples. On the other hand, consumer discretionary are the stuff that you must buy to feed your family and feed yourself. The Woolworths, the Coles, the stuff that you need to buy the meat from, the milk and the bread. So energy is very volatile at the moment, as you can see here. Went from neutral, bearish, very strong bearish, and then hit a wall, and now it's neutral. Okay, the Australian market ASX chart, you can see here, before Christmas, like the United States, it dropped nearly 13%, recovered most of it, and continued to zoom up, and we're likely to hit an all-time high which we reached recently on the ASX 200 back in 2007. So now we can say that our market has reached an all-time high, well, if it exceeds that level that we saw in 2007. Of course, there is a good chance behind all of these factors, the RBA, the Reserve Bank of Australia, is lowering the interest rate. It makes it cheaper to borrow money and easier on the household, because the interest rate that you pay on your loan will be decreasing. It has already decreased from dropping the cash rate from 1%, from 1.5% to 1%, and it's likely to drop a bit further. Now, in terms of the mechanical system that we have got in-house, CBA is a good company to trade at the moment, and so is Macquarie Bank, and so is Newcrest Mines, even though I mentioned that gold is moving sideways. But Newcrest Mines is still holding its ground because of the cost to produce gold from their mines is one of the lowest, and as long as the price of gold remains above 1400 US, obviously Newcrest Mines benefit from that level. Rio is down, went from one bear to two bears, so you don't want to actually go bullish on Rio. Woolworths that's consumer discretion staples. It's actually bullish, and Wesfarmers is bullish as well. Woodside Petroleum is bearish. Suncorp went from bearish to bull, so maybe you want to look at Suncorp. And Transurban, you may want to look at also at Transurban TCL. Now I want to show you that in the last 5 weeks we've started to trade CFDs, contract for difference. I've actually been sending quite a number of presentations, and you can see here on the 26th of June we put $500 into an account, and that was a demonstration on how you can trade CFDs with very low outlay. So after 4 weeks, the $500 became $869.54. That is 74% profit in a very short period of time. And now what we see here, we did those trades on Appen as well as on Perseus. Perseus actually shot up as soon as we bought it. You can see here that we've got Appen, and Perseus. We made $1,230. That is actually the selling price. That's the buy trade, and we closed it at commission charge, and at the time Perseus was still open, but Appen we opened and closed, and we made some profit out of Appen. Now today, this morning, when you look at the position, after we've closed Appen. Oh, we entered also Karoon and Perseus. We made profit on the 3 of those and we closed them all. And now we're sitting on $1,165 from 500. That is 133% in just 5 weeks. So we doubled your money in 5 weeks trading CFDs. Of course, you need to be aware of the danger and the risk behind everything we do, because nothing is guaranteed when you trade or invest money on the market. However, if you know something about the market, it helps you to be wise and to know what to trade, when to get out, and to how to maximize your profit and minimize your losses. So it's all about knowledge of the market and be informed. We run courses. We teach people how to look at charts, look at signals, when to trade, when to get out, when to hold, when to fold. And of course, if you are well educated, that will obviously avoid you from losing a lot of money. And in actual fact, hopefully you'll make a lot of money. Now, because I don't know your financial circumstances, this is our disclaimer. Please, before you take any action, remember that everything we said is only of general advice only. Nothing is of personal advice. I don't know your financial circumstances. So please talk to us or talk to your professional advisor. If you have any questions, all you have to do is ask. And that's actually our details. You can write to me at george@fssecurities.com.au, george@fssecurities.com.au. You can call me on my mobile. If you're ringing from overseas, you put 61 and you don't need the 0, 61 411 259526. Well, finally, happy trading. Enjoy. Hopefully I enjoyed what I spoke about today, and please make money.